Bill Bain founded our business back in 1973. He and the other founders had an insurgent mission. They wanted to help clients create so much competitive advantage they would fundamentally change the rules of the game and set new elevated standards in their industries. And that Bain, as the advisor to these clients, would likewise set new standards of excellence in the consulting industry. And we achieve this in ways that are just fundamentally different from our competitors. We have a practical and collaborative working style. It's all about getting results. It's not generating PowerPoint reports. And that means having the courage, the candor to tell it like it is to our clients, and also have the humility that current accepted beliefs may actually be wrong in many cases.
So it's very much still a people business, so to speak.
It is. I think the power of the people that we have, the culture, the focus on results, these are really differentiating factors for Bain Company.
So in terms of products, you do not standardize the service, but you standardize the character, so to speak. Can we actually do that in reality?
You know, it's interesting. By definition, to scale anything across different sectors, across different geographies, you do need to have solutions that can be developed and transferred across different places.
Yeah.
The level of customization, the amount of change management that's involved, the depth of the relationship that you have with actual human beings, other executives to drive the change, that's really where the magic happens beyond the sort of the individual solutions.
I see. Now, Edmund, let's talk a bit more about your customer base, because I understand Bain Company serves over 64% of Global 500. You serve private equity funds representing 75% of global equity capital, nonprofits, leading startups as well. Question though, how would you then segment your customers by industry and size? What do they demand from you? What is the average transaction size?
Look, as a global leader in the consulting industry, we're naturally working across industry sectors. We're also horizontally working across capabilities. This ranges from strategy, organization, enterprise technology, advanced analytics, M&A. What clients really value is when Bain can connect the dots and recognize patterns across sectors, across geographies. I'll give you one example. One of the large global banks we advised was grappling with the complexity of their global matrix. It was slowing down decision-making, and they were delivering results that were below those of the leading local banks in the markets they competed in. To completely rethink their operating model and their decision processes, we actually found the best analogies from large leading global consumer products companies. And we found that by custom tailoring some of these principles to a complex global financial institution, we could create something quite different. Also, increasingly, you're seeing a lot of large, established, publicly traded corporate titans who are under fierce pressure from activist investors. For us, with about a fifth of our own business from advising leading private equity funds, we're able to bring unique and practical perspectives to publicly listed corporate clients and advise them on the expectations of activist funds, help them rethink their strategies, and better achieve public market expectations. I think it's through the diversity of our business, covering all these different market segments and geographies, where we create differential value for clients.
Is there a particular slant towards any industry or towards any company size, so to speak?
Yeah, it's a good question. By definition, we're working with some of the largest companies in the world. At the same time, as we talked about, we're working with some of the
SMEs.
Largest private equity funds in the world. But then with certain associations, like what we've done on the decarbonization program in Singapore at scale, trying to work across SMEs. What's interesting, I think, is the level of variety. And I think it ties back to the people proposition. If you ask the average top graduate that joins Bain, tell me exactly which industry you only want to work in, you're going to find that people want to have that level of diversity. So I think the ability to have impact, at scale across sectors, across geographies, that's also tied to the people proposition we offer as well.
Okay, now let's take a look at your geographical footprint. At Bain Company has a presence in, earlier we talked about 65 cities across 40 countries. Take us through your global footprint. Which is the most important geographical market for the firm? Ultimately, what is the role of its Southeast Asian and Singapore business against the wider global portfolio?
Well, let me personalize this. It was over 30 years ago that I moved to Singapore. And with another colleague, we set up Bain, and it was the first major strategy consulting firm in this local market. We were one of less than 12 global Bain offices back then. And the consulting industry in Southeast Asia way back then was nascent, and there was missionary work where you worked with clients who had never engaged advisors to help with business performance. The biggest catalyst for Bain in the 90s was the Asia financial crisis. Many local companies were on the brink and they needed massive restructuring. Other local and MNC companies were in a stronger position, and they capitalized on the crisis. They hired us to look at rare M&A opportunities, to invest organically, to outgrow weakened competitors. Our business flourished in the Asian financial crisis and subsequently in .com, SARS, the global financial crisis. And the two things I'd highlight about Singapore and the region, one, the quality of the talent, and two, this shift of best practice from just the West to the East. Number one, in the last 30 years, Singapore has been an amazing talent hub for Bain. We have so many global leaders in our firm who've grown up in the business here, and most, like me, still serve global roles from this geography. Singapore is also a magnet for many of the top global talent and capabilities. And for example, our sister company, Bridgespan, which we set up here 2 years ago, it's the global leading advisor to nonprofits, foundations, and philanthropists. Second, this old model of the 90s and the 2000s was to take our local clients here in Asia and go visit best practice companies in the US and Europe. Today, the flows go both ways. There's a massive appetite for Western companies to look at what's being done in Asia, best practices in digitalization, sustainability, AI from Singapore and Asian companies, and particularly the Singapore government and civil service as well.
All right, let's talk a bit more about where things are at for Bain Company as we head into 2025. How would you describe the global macroeconomic environment in which your clients are operating in, and what are the challenges in having them achieve profitable growth?
There's a mix of both optimism and caution in Southeast Asia right now. The threat of potential tariff increases, it's real, especially in markets like Vietnam, where you've got a $100 billion plus trade surplus in 2024. That's 20% higher than 23. There's continued realignment of supply chains and expectations of continued U.S.-China tensions. There's also an expansion of more Chinese companies looking to export and manufacture more in Southeast Asia. And we have continued adoption of AI at increasing scale, and that's got the potential for significant gains across all industry sectors. We're net optimistic about 25, and we're seeing very real client demand across many dimensions, rethinking regional operating models, reevaluating technology architecture, and a push to the cloud, an increased appetite for M&A in a lower rate environment, embracing AI at scale and shifting from one-off prototypes to building production-grade solutions that can scale across organizations. I think that Singapore and Southeast Asia will be an increasing source of inspiration and best practice for other clients of ours in our portfolio around the world.
Okay. Now, two parts to this follow-up question, right? Don't mind me asking this. Does Bain Company, generally speaking, benefit from downturns where we see, companies that are doing well now look for M&A targets to get a bargain? Companies that are not doing so well look to restructure. Do you benefit from economic downturns? And right now, as companies in Southeast Asia navigate through rough seas, how are you helping clients, and how does that filter down to your balance sheet as a consulting firm then?
Yeah, it's two really good questions. Look, the first one is quite simple. The playbook that you have to serve client needs, it has to change with the economic environment. In a downturn environment, helping companies, rethink the size and shape of their organization, rethink their supply chains, look at opportunities for getting more leadership through whether as you said, inorganic or organic means. That playbook, by definition, has to shift if you're truly client-centric and you're delivering on what your clients need. Your second question, can you say it one more time?
Yeah, so as companies navigate rough seas, how are you helping them do that? And also, what does that mean in terms of, the numbers and the money that flows in on your balance sheet then?
Yeah, no, I like your question. I think it ultimately comes down to the litmus test and the moment of truth for a client relationship is actually often when a client company is at their most challenged, where you have relatively fewer friends. The financing is harder to come by.
Yeah.
The customers are not taking your calls. The negotiations with your suppliers are that much more difficult. There are so many things that we've seen, crisis after crisis, that we can do to help companies really achieve their full potential, give them the confidence, give them the learnings that we've seen in other geographies with other clients to really help them navigate through difficult times. Sometimes the more immediate benefit is the share price performance of the companies that we help turn around in these difficult times. That's obvious. The more subtle change is the depth of the individual executive relationships and the board relationships that you deepen during these periods. When you truly help companies, whether they're publicly listed or private equity owned, make it through a rough patch, the depth and quality of those relationships and the loyalty that engenders, that's something that's really quite hard to measure in terms of dollars and cents. And it really is, as you had alluded to, balance sheet build that you do over time in a business like ours.
I'm just going to try my luck here since you're in the studio with me, and only if it's convenient for you, right? When times are hard for firms, do we see firms going to consultancy companies to say that I need some help and I'm willing to maybe spend a little bit more on consulting? More or less also because executives need to justify their business decisions that they're going to make down the road as well? Or do we see companies saying that, okay, I'm not doing so well, I'm going to scale back on spending, I'm not going to spend on consulting work?
Yeah, it depends on the company that you're dealing with and how tough their predicament is. One thing that we tend to do, whether it's a good time or a more difficult time, is to look at ways that we can align the economic incentives of our clients with our own. So our willingness to put fees at risk, tie that to actual business outcomes, whether they're revenue related or cost related or CapEx related. That's something, whether it's a kind of a boom year or a bust year, we have a strong willingness to do. If we feel like the level of trust and the ability and the willingness of the client organization to implement is high, our willingness to have tied incentives and tied economics, that's something that I think really distinguishes ourselves.
I see. Now, let's take a look at the macroeconomic trends going forward, because Bain Company boasts an interdisciplinary capability, and that's called future sensing. It helps to interpret signals within a host of emerging trends to provide insights for firms to navigate turbulence, maximize opportunities, and also reduce risks. Now, key priorities for CEOs to monitor in today's volatile and uncertain environment include understanding the power and peril of AI, rehumanizing work, and waving goodbye to the invisible hand. What are some key priorities for managers now, and how are you helping your clients manage these priorities?
Yeah, let me give you one example of that. I think a very disruptive trend right now is the workforce implications of AI. And if you looked in 2023, there were a lot of headlines about how AI was going to eliminate your jobs.
Yeah.
In 2024, a lot more press about how AI was going to bring joy to your jobs and create new jobs. You go all the way back to 1996. There was a famous quote by Bill Gates. We always overestimate the change that will occur in the next couple of years, but we typically underestimate the change that will occur in the next 10 years. Don't let yourself be lulled into inaction. I think we're in a fascinating period of opportunity, and over the next 5 to 10 years, AI will fundamentally reshape the workforce for companies as well as for employees. What we're seeing right now in most sectors, in most functions, is more about job augmentation than job elimination, enhancing human capabilities and decision-making without replacing outright human involvement. There's no doubt that some jobs will be fully automated, but that's frankly in the low single-digit percentage of jobs impacted. And by the way, there's a similar number of jobs that are created to support AI deployment right now. Companies that get on the front foot, that reimagine the future shape of their workforce, these are the ones that will win out. And for employees, those that embrace more of a learning mindset and double down on the value they can uniquely add, enhanced and not replaced by AI, these are the folks that will thrive. And for us, what we're finding is a lot of increasing demand from clients that want help navigating their AI journeys. And this is everything from developing the right strategies to setting elevated ambitions to actual development of production-grade solutions and looking at these kinds of workforce implications.
You talk about a lot more companies are coming in requesting for work to help them better tap the growth in AI. So how much money is it in it for Bain Company to double down on its consulting work in the field of AI and also in the other trending areas that you talked about?
It's worth a lot. So if you look at today, about a quarter of our business is tech and AI related with our client base. Yeah. Quite frankly, we see that going well into 50% plus in the coming period. So it's really at your peril. And frankly, at the risk of not doing what's necessary for clients to thrive if you don't embrace this at scale. And it's a huge priority, as you might imagine, for our business.
I can imagine. Now, what are some of the other key areas that clients are increasingly seeking consulting services to augment their businesses, particularly in Southeast Asia? I know some areas that people are looking at: healthcare, primary care models, sustainability, luxury as well. We are seeing a polarizing market, demand from China drying up as well. So what are you looking at? Which area is proving to be the most lucrative for Bain Company as a consulting firm?
Well, look, let me start geographically. To be perfectly honest, we're seeing very broad-based demand in Southeast Asia.
Yeah.
Singapore is a very strong market for us across the board. We've got local companies here that increasingly expand in the region. We've got MNCs that are balancing regional exposure across Greater China and ASEAN. That's creating a lot of work for us here in Singapore locally. In the last 2 years, we opened offices in Manila and in Ho Chi Minh City. And in those markets in the Philippines and Vietnam, they've been a couple of our fastest growing geographies across the region and frankly globally. We're also bullish on Indonesia post-election. We see good fundamental demand in Malaysia and Thailand. One area we're also quite optimistic about sector-wise is private equity.
Okay.
We've got a low rate environment. Deal flow is going to increase. The ability to take portfolio companies and really dress them up to the position where you can bring them to market and sell them, it's much more attractive in a 25, 26 timeframe than we would have seen in 22 and early 23. And indeed, as you highlighted, healthcare ecosystems, they're ripe for further growth. That's not just in Singapore, that's across Southeast Asia. And I'd say as well with technology, consumer products, and financial services as priority sectors as well.
Now, if you're just tuning in, we're now in conversation with Edmund Lin, Chairman of Southeast Asia at Bain Company. And Ed, I do want to begin to wrap up the conversation looking at the potential of AI. Bain Company in September released a new research report where it noted that the market for AI-related hardware and software is expected to grow between 40 and 50% annually. And that means we'll reach a level of between 780 and 990 billion US dollars by 2027. What's the basis behind the numbers? What are the implications for Bain Company as a consulting firm, given how firms in the AI ecosystem may be looking to scale their businesses as well?
Yeah. Look, the growth expectations in AI-related hardware and software, they're very real. We're seeing just a level of demand across the board, and this is globally. And the capital markets are obviously rewarding this with upward revaluations of NVIDIA, Microsoft, Google, and others. This is not a new and unique situation. Technology has changed the nature of work and the scale of economies across human history. If you actually look at 60% of workers today, they're in occupations that didn't exist 80 years ago. 85% of job growth has been driven by technology. One thing that I'd highlight is how, workforce requirements in this day and age with this kind of growth, they're going to change. Soft skills, attitudes, they're going to be more important. Critical thinking, strategic reasoning. Another shift is, we're going to see less need for individual domain expertise and a shift to more general skills. At the same time, we're going to need specialized capability to implement and use AI to its full potential. And we're going to see employers needing to, really do their part to rethink the task load and mix that they'll be scoping jobs for to reflect the increased importance of human skills.
Okay. Now, speaking of AI, we must talk about your partnership with OpenAI, Ed, because Bain and OpenAI, they have been working closely together since 2022. There was a global service alliance formed in early 2023 that brings OpenAI's capabilities and platform to Bain's clients worldwide. And that partnership with OpenAI was further expanded in October 2024 as well. So first things first, take us through the evolution of Bain and OpenAI partnership through the years. What is the significance of such partnerships?
Look, the nature of the work we do for clients, it's evolved quite rapidly in the last 10 years. And the level of hands-on implementation we do with tech solutions, it just ramps up significantly. Specifically with Gen AI, our work is anchored on actual delivery of production-grade solutions for clients. And to do that best of breed, you simply can't do it alone. Yeah. We found it critical to partner with best-in-breed tech and hyperscaler partners. These are the likes of OpenAI, AWS, Microsoft, and others. And we do this together with these companies to tailor solutions for our clients, which are typically, our clients are typically solution agnostic. So you need to be able to partner with many different firms. Now, in the case of AI, OpenAI specifically, indeed, we've been collaborating together for the past 2 years, and we're investing to get together to develop cutting-edge solutions real time. These are in sectors right now like life sciences and retail. And watch this space. We're expecting some truly disruptive models to emerge from this collaboration.
Ed, I might be oversimplifying this, and if I am oversimplifying, please correct me, because To a layman, it appears that the proposition of a consulting firm is to pass through reports, interview people, condense vast amounts of data and information into detailed analysis and actionable steps for companies to solve the biggest problems on their minds. And it appears that Gen AI can do that as well with some training, particularly with ChatGPT and beyond. What do you then think is the role played by traditional consulting firms in the age of Gen AI? What is your value add, given how you're also tapping into Gen AI yourself with that OpenAI partnership?
Yeah, look, the ultimate value add for Bain to our clients, it's not the number of reports we generate. It's not the number of people we interview. This is ultimately about driving actual, tangible results that are recognized by the market. Tools like Gen AI, they're incredibly valuable in helping our teams more efficiently and effectively drive analysis, and that underpins sound recommendations. But the real magic, it's in recognizing patterns. It's coming up with unique insights that help companies pursue opportunities that competitors can't replicate. And it's about working collaboratively to help push a client beyond their comfort zone, build capabilities they thought were impossible without outside help. That's where, we truly add value.
That brings me to my next question as well. At how far can consulting firms, for lack of better words, outsource their research work, secondary research work as well, to generative AI? And given the amount that you outsource, how far can you then retain the value of your work and justify the price that you charge? Would we see the firm pivoting more towards creating primary research case studies that could be then fed into the AI systems then?
Look, it's a really good question. And, we've traditionally put a lot of emphasis for our junior employees on hard skills, things like data gathering, analysis, Excel modeling. Going forward, it's going to be much more important for these team members to ask the right questions and validate and understand the implications of their analysis rather than actually doing the work. That actual work can be automated materially by Gen AI. So this needs to be reflected in how we develop and train our people, where individuals can demonstrate leadership in fundamentally rethinking how work gets done, challenging the status quo. And look, no, I don't see successful consulting firms pivoting to more published studies. Those will increasingly be commoditized. The value add needs to be demonstrated with custom-tailored advice and the ability to be a true implementation partner for a client, not unlike a high-performing athlete that needs a personal trainer and a coaching team to help achieve full potential.
How do you actually train workers to be able to navigate the intricacies in human-to-human interaction? Is it going to be more customized going forward? Are you putting down more investments in HR then? Yeah,
look, back to the day that I started at Bain, this has always been an apprentice business. So the learning that you get, it's by being on the front lines, actually working with clients, seeing more senior folks and how they handle different situations. That part hasn't changed. If anything, I would argue the importance of that and the need for actual physical interaction as opposed to this period where we had more kind of virtual interactions, that's gone up quite materially. What I would say is, compared with the past, the ability of junior team members who have that kind of apprenticeship to add value faster because they have more tools at their disposal with the power of Gen AI, that's actually quite remarkable. And I think the value that you can add for our clients is quite significant.
Okay. Now, how do you then foresee competition among consulting firms to be like in the age of AI? Would the rise in adoption of Gen AI result in higher client expectations on ROIs then?
Look, over my last 3 decades at Bain, I would never characterize the consulting industry as lacking competition. A decision by a client to engage a firm like Bain, it's discretionary, and the return on fees has to be material. I would say at least 4 to 5 times to be a worthy investment. And by the way, not just on fees, but the commitment of leadership time from organizations to work hand in hand with a firm like Bain, it's a big commitment. What we find is always most critical, and even more so in the age of AI, is the depth of the relationship that you have with a client, the ability to really fundamentally understand their business, their issues, recognize patterns across sectors and geographies, and tailor advice that creates genuine competitive advantage. That's what makes the most difference. Okay.
Now, before we let you go, right, at All In, what do you think is the outlook for the consulting industry and for Bain in the years ahead? What are some future plans? Keep us excited.
Look, like 2024, we see 2025 as a very strong growth year for Bain. I say that globally and particularly for Southeast Asia and Singapore. we're particularly bullish on the impact we'll drive for our clients on their technology, AI, sustainability, and performance improvement agendas. And look, in the region here, we look to showcase best practice client results to the rest of the global network. And as I mentioned earlier, the impact of tech and AI, which is now enabling about a quarter of our business, we very much see that going up to 50% or higher in the time to come.
Thanks a lot for the insights, Edmund. Really appreciate it. That was Edmund Lin, Chairman of Southeast Asia at Bain Company. Thank you so much for joining us on Money FM 89.3.
Tian, thanks so much.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.